Hello friends, today I want to cover the very important topic of can you do a land contract with a mortgage? Well, by the end of this video, you'll understand the ins and outs of utilizing a land contract when there is an existing mortgage. Whether you're a buyer or seller, this video is going to help you navigate the potential legal and financial pitfalls. Land contracts can be tricky, and many times there are more questions that come out regarding land contracts than there are answers. And one of those are, is it even possible to do a land contract if there's already a mortgage in place? Would it even be legal to sell a property to somebody utilizing a land contract if there's a mortgage on it? Well, stay tuned as I break down this process by first explaining exactly what a land contract is. Next, I'm going to offer up pros and cons to both the buyer and the seller when it comes to land contracts. And finally, I'll break down for you how you can do a land contract if there is a mortgage already in place. If you're ready, let's go. So a land contract is a legal agreement for a seller finance purchase that is negotiated between buyer and seller. It does not involve a bank or any traditional financing. And the buyer is going to make periodic monthly payments directly to the buyer, and that buyer does not get full ownership of the property until the last payment is made and the conditions are met. A land contract is many times called a bond for title or a contract for deed. So what are the components of a land contract? Well, number one, you have sales price, right? That's negotiated between buyer and seller. You have interest rate, and many times interest rate is going to be a touch higher because it is through seller financing versus traditional financing. Number three is a down payment if there is one. Many times with a land contract, the reason a buyer would engage in this is because many times they can buy a property with no down payment at all. The frequency of the payments is another component within a land contract that's negotiated between the buyer and seller and how much that payment is. Another negotiated point within the components of a land contract is there going to be a balloon payment at some point down the road? Many times the seller is going to amortize this payment over a 30-year period of time. However, at some point, the seller might say, listen, even though the payment's over 30 years, I need a balloon payment in 5 years or 10 years, meaning that you, the buyer, at that point will have to be in a position where you can get traditional financing to be able to then pay off the seller the remaining balance of the mortgage. Another important component, especially for the buyer, is something called equitable title. This just means that you have something in place that says that the seller isn't going to go behind your back and sell this to a third party, or he's not going to go out and get liens against the property. Also, an understanding of who's responsible for taxes, insurance, maintenance, utilities, and typically in a land contract, that is all going to fall on the buyer. Assurances that there are no liens or taxes owed on the property. A default clause would be absolutely great to have in a land contract because many of them don't have it, but that can save you a lot of brain damage down the road, both as a buyer and the seller. And then obviously a requirement to record the land contract with the appropriate government agency. All those components will make a land contract that much stronger. So why and when should a land contract be used? From the buyer's side, a land contract is used when the buyer cannot get traditional financing. So the buyer wants to buy a home, but he doesn't have enough money for a down payment. Maybe you don't have the credit history. Maybe you don't have the work history to be able to qualify for a loan. Or maybe you've been through some financial challenges in the past of a foreclosure or a short sale. And many times with a foreclosure, you are not able to even get a loan from a bank until 7 years after that passes. And that could even be longer. And a short sale where you've missed many payments, that'll go on your credit history, impacting that and hurt your ability to get traditional financing. So many times it sits for the buyer is they don't have any other options, but it gives them the ability to have home ownership. The other reason a buyer might want to do this is because maybe they don't have enough money saved up as a down payment and they can just start in making monthly payments rather than putting down a big down. So from the buyer's side, there are the pros, right? They're able to get into something. Now the cons for a buyer could be potentially dangerous where if they stop making payments or they default, the seller retains all those payments that they've ever made and they can evict the buyer from the property without needing to pay back anything, which is an extreme benefit to the seller. And many times a land contract extremely benefits the seller in these situations. Another benefit to the seller is they can charge more than a bank does because they're taking additional risk. So is it possible to do a land contract when there's a mortgage on the property? It absolutely can be, and here's how it works. It is done with something called a wraparound land contract. What that means is just like it sounds. So you as the seller of the property, if you have a mortgage on the property already and you're looking to sell your home, but the person can't get traditional financing and you do a land contract, this is what it means. You are going to take the payment from the buyer that you get every single month and you're going to wrap that around and you're going to pay the bank or the person that has lent you the money and you will keep the difference between those two payments. So let's say that your payment's $2,000 a month, and in the land contract is $2,200 a month that you're receiving from the buyer. You would take that $2,200, you'd pay $2,000 to your lender, and you would keep the difference. That's called a wraparound land contract. So if this is in place and you are a buyer, what benefits do you have as the buyer? Number one, you receive the warranty deed to the property immediately. However, you do not retain or regain full ownership of the property until the last payment is made on the land contract and all the conditions are met. One other thing to note is the seller's lender must usually agree to this arrangement and will many times understandably retain the primary lien position, right? Because the lender is going to be in first position of the property. So if the buyer doesn't make payments or the seller doesn't make payments and a foreclosure needs to happen, the bank is the one that's going to come in and have first right of refusal because they're in first lien position. However, if you are the buyer, something to be aware of, and this is why I would retain and get a good legal attorney who understands land contracts, because if you are paying a payment to the seller and they're supposed to be paying the mortgage company and they stop doing that, and all of a sudden the seller is 2 or 3 months late on payments to the bank and the bank decides to foreclose, then you are in a very difficult situation because you are not in first position. You don't have many rights if the seller stops making that wraparound land contract payment, and you could be left in a situation where all the money you've paid on the home that you thought you were buying is lost because the seller stopped making payments. So in order to protect yourself, I would get a real estate attorney to make sure that they understand land contracts, especially wraparound land contracts. Now, these are things that I've seen happen when there's an existing mortgage on a land contract, but please give me your feedback. What have you seen with land contracts? Pros and cons, negatives, positive. So please comment below. Let's engage in a dialogue. As always, just for watching the video, I've got a free gift for you. It is a short-term rental calculator. You input the price of the home, the income, the expenses. This software will actually spit out to you whether it is a good deal or not. And it's 100% free, no obligations. Just click on the link below, aaronsfreetraining.com. Thank you for stopping by. Have a great day.